It was generally a weak second quarter for banks in the district in 2016. Hi, my name is Ron Feldman. I'm the Executive Vice President here at the Federal Reserve Bank of Minneapolis, and I'm going to talk a little bit about banking conditions in 9th District states for this quarter, which is the second quarter of 2016. Before we get going, I want to give a little bit of background on the 9th District. It consists of the states of Minnesota, North and South Dakota, Montana, the western portion of Wisconsin, and the upper peninsula of Michigan. And we've got a lot of data on both metro areas and states and different kinds of banks. And send us any questions you have, we'd be happy to get back to you. So let me summarize some of the information that we have on the second quarter. I would consider it to be a weak second quarter, or maybe sort of a flat performance second quarter, definitely not positive. Why is that? Well, first of all, profits for the second quarter relative to the first quarter were flat. While they're at historical norms, I think most banks are looking for improvement, and that's not what we got in the second quarter of 2016. Loan growth was generally falling for almost all the banks in the states of our district, and it's really that combination that would lead me to characterize it to be weak. And then finally, on the positive side, problem loans, which are at very, very low levels, remain so. So I'm going to give you three examples of these results, picking from the different states in the district. First, I'm going to talk about Montana profitability. All of these charts I'm going to show you are very similar. Let me explain them. They're for the median bank in the state, so that would be the bank right in the middle. If you lined everybody up from highest profits to lowest profits, this would be the bank right in the middle. You'll see a line on this graph, a dashed line. That's the historic performance over time for the profitability measure. And then finally, there's a green barbell at the end. That's my forecast. So I made a forecast at the end of last year for what profitability would be for the median bank in Montana at the end of this year. So for Montana banks, it was a flat quarter. That means there was no improvement of profitability relative to last year. For most of our states, you would see this line near the historic norm, but for Montana, it's still below so. So it's particularly important in a state like Montana. Banks are really hoping to get back to what's historically normal for profitability. And it's this sort of performance across many of the states we have that is flat second quarter that would lead me to call this a relatively weak, or at least not a good quarter. A good quarter is one where we're going to see profitability growth, we're going to see loan growth. That's not what we saw. To make the point about loan growth, let's look to North Dakota. Again, we're talking about the median bank. And you can see that loan growth fell way off in the second quarter. Now, it's important to emphasize that what we're talking about here is loan growth. So you can have positive loan growth this quarter, but it's still less positive than it was last quarter. So I'm not saying that we're actually having negative loan growth, just less positive. I'm expecting loan growth to bounce back to its historic norm, but at least as of now, it's way down. And then finally, let's take a look at problem loans. Here we're looking at it for the western portion of Wisconsin, and you can see relative to the historic norm that we are, in this state and virtually every state in the district, we're way below historical norms. That means the number of problem loans that banks have are relatively small compared to what they're used to. Now, of course, we've not that long ago went through our financial crisis, and you could see that problem loans really spiked up in Wisconsin and other places. Now they're back to actually below pre-crisis levels. So let me sum it up. I think it was generally a relatively weak or flat quarter that's driven by profitability being flat in the quarter, loan growth falling. Problem loans are generally in good shape, so that's not an issue. Thank you.